So in this video, we're going to talk about how New York City business owners can reduce their taxes. I'm Anil Malwani. I've been a CPA here in New York City since 2005. I was born in the city, I grew up in Long Island, I've been a New Yorker my whole life. And I really feel that I am the expert when it comes to dealing with taxes and accounting in New York City. Before I became an accountant, I worked with my dad in the home furnishings industry. We used to have a showroom downtown in Manhattan. And my dad's been in the garment center since 1970 something, before I was born. And we know how to do business in New York City, and we know how to deal with taxes in New York City. So if you're a New York City business owner, I'm definitely the person to speak to about how to operate in this very complicated, very expensive city that we live in, work in. When it comes to reducing taxes in New York City, of course, there's many different things we can do here. It starts with entity selection, how to set up. Do I become an LLC? Do I become an S Corp? Do I incorporate another state and somehow, bring that other foreign state entity to operate in New York City? Look, there's many things we can do. And a lot of times we are going to bring in other people. We're going to bring in maybe a lawyer, a banker, a financial advisor, a payroll company, another software company when it comes to dealing with sales. We're going to bring in other people to be part of our team, but we're the best place to start. So I'm happy to, have that consultation with. You're a business owner in New York City, email us, call us, let's sit down. You prefer Zoom or Teams, no problem. We'll do it that way. But, let's just talk about all the different things we can add value to, and then you make your decision who you want to work with. So now let's specifically talk about like New York City income taxes, okay? You obviously have your federal taxes, your state taxes, your city taxes. You have 3 different types of income taxes here in New York City. Plus, of course, you got all these other things like sales tax and payroll tax, depending on how you're set up, depending on your business, okay? So when it comes to reducing these taxes, first thing is you got to have your books in order. You got to have your books and records in order so we can see where we can knock things off. Do we contribute to retirement plans, 401k plans, IRA plans, college saving plans? Do we do a cost segregation study to increase your depreciation? Do we use Section 179 or bonus depreciation before year end, before December 31st, to buy things for your business that you need anyway? Maybe we should buy it a few months earlier to defer taxes or reduce your taxes. There's all these different kind of contributions or asset planning or purchasing techniques we could do to save you on income taxes. But it all starts with having your books and records in order so we know how to make these decisions. Most people use QuickBooks. Right? So is the QuickBooks up to date? Is it reconciled? Is everything in there properly so we can make these decisions? Or if QuickBooks isn't the right solution for you, you want to go basic as Excel, maybe that you're simple enough and small enough to do that. Or we need to implement another accounting system or ledger system to make sure we have these financial statements to make these decisions to eventually reduce your taxes. That is what we're going to do. We just need to be in the right position to do that. So for you New York City business owners out there, when it comes to saving taxes operating in New York City, ironically enough, and especially now with this COVID remote world we work and we live in, and we have no choice, we're in it, the world has changed, right? One of the options, the better options may be to relocate your business and or your residence outside of New York City. Now, does it have to be all or nothing? Not really. You could potentially, for example, set up an office in Florida, in Miami, and try to run as much as you can out of Miami and still have a little operation in New York City. It doesn't have to be all or nothing, But yes, where you operate, where you and your employees operate physically, whether it's, just work, actual manufacturing or working, or where you do your conferences or where you have your meetings, or, yes, New York City is one of the most expensive places to operate in the world, right? When it comes to America, San Francisco, LA, New York City, so a lot of these big cities are not only more expensive tax-wise, but more expensive rent-wise and payroll-wise. So it really, yes, it's a tax decision, but it's really an overall business decision. And yes, operating out of a place like Florida and maybe even Puerto Rico, the Puerto Rico thing is a hot topic now. So we might have to structure you differently, structure your business differently, your life differently to save on taxes. And look, the highest brackets in New York State, New York City, forget about federal taxes. If you add in highest New York State, New York City bracket, it comes to almost 15%. That's 15% you could potentially save by operating out of a place like Florida, Texas, Nevada, Washington, compared to New York City. So it's a conversation we have to have, and numbers have to be run. Of course, as long as you are personally able to wrap your head around that, we need to run these numbers, projections, estimates, and see if a move for your business and or your personal life makes sense. When it comes to saving taxes, one of the biggest things you can do is plan for retirement. And the reason for that is most retirement plan contributions are tax deductible. And I say most because then there's the Roth. But let's go to the Roth later. So when you contribute to a traditional IRA, a SEP IRA, traditional 401k, all of those contributions are tax deductible. They reduce your taxable wages or income, and you pay a lot less tax. But of course, when you withdraw from these accounts later on, you're gonna have to pay tax then. The concept is, the thinking is when you're at that age of retirement, 60, 65, 70, 75, whatever, you're probably in a lower tax bracket than you are at 25, 35, 45 years old. So take the deduction now when you're in the higher bracket, and then pay the taxes later when you're in a lower bracket. So that's a great way to save on taxes, plan for retirement properly. Roth contributions, Roth IRA, Roth 401k are not tax deductible now, so it doesn't reduce your taxable income now, but it comes out tax-free later, which the thing behind that is even if you are in a lower bracket later or not, at that point you just take the money out, spend it how you like, and not pay any tax on it. So saving taxes and retirement have a lot to do with each other, and it's really important to keep your books and records up to date, meet at least a few times a year with your accountant, your CPA, also potentially your financial advisor, and plan for retirement properly so you can save the most on taxes, but also plan for retirement at the same time. Very important to do that to maximize your savings on taxes, especially in a place like New York City. At this time of year, after October 15th, it's very important to do year-end planning, not only planning for this year's taxes, but also next year's taxes. By planning ahead, you can save money in both years potentially, save money this year and next year. So by looking at where you stand, let's say as of October 31st or November 30th, seeing your 10, 11-month financial statement, comparing that to the year before, your projections for the year after, you can definitely make a lot of decisions and financial transactions in the next few months to maximize your position, not only this year, but also for next year.